But right now, we are still focused very much on Canada's economy. It created an impressive 95,000 new jobs in May, the biggest monthly gain in nearly 11 years. That gain came after the economy created just 12,500 jobs last month. And here to go through these numbers is Kelly Dixon, president of Workopolis. Kelly, great to have you with us. Thank you. Let's talk about these numbers because there is discussion in terms of whether they're sustainable. Are these numbers just too volatile? What's your take on what we saw today?
I think everybody was surprised by the number. I think Workopolis, what we watch is the entire market to see how many job advertisements are going out. And we continue to see growth this year in the last couple of months. So we were bullish on May, but nothing, we weren't expecting this high of a, we were expecting positive, but not this positive.
So where are you seeing some of the strength right now?
A lot of the strength that was positive in the numbers today was that it came from full-time. It was across the country. A lot of it was in Ontario. But it was nice to see that so much of it was driven out of full-time versus part-time labor. So that was great to see. And the other encouraging thing was the unemployment rate in youth. So in May, you have a lot of students coming back into the market, and we've been struggling with the unemployment rate with the under 24. But this month we saw about 54,000 net positive jobs, so their unemployment rate actually went down.
What's the sentiment right now, do you think, from corporations in terms of hiring? I mean, these numbers would indicate that it is on the strong side. What's your take? What are you hearing?
We did some research back at the end of the year, and we were surprised to hear how bullish organizations were, but they didn't come through. The private sector hasn't come through up until this point to this degree. So a lot of the interviewing we did, we asked when they thought they might start to hiring, and they did say spring, so it's starting to come to fruition. And
what about hours worked and wages? Where do we stand on that front right now?
So we noticed that hours worked went down last month, which was surprising because the gain was in full-time. So we're surprised by that, and it was great to see the gain in full-time.
And Kelly, what about when you look at the volatility of these numbers, like 12,500 the month prior, 95,000 this month, what do you think is the right trend rate that we should be looking at?
I think we're going to continue to see growth in June and July. When we watched the activity last month, May had a lot more jobs advertised on the market. It was one of our largest spikes that we've seen. So we're still a little bit bullish that you'll see growth in June and July, but not at this rate.
And what areas in particular are you looking at?
Areas right now, a lot of the growth is still in construction and trades. Almost half of the new jobs created still come out of those two segments. And a lot of that's been in the West. And the West can't sustain this level of new employment. Their unemployment rate is already at less than 5. And then heading into summer, like usual, we're seeing a big spike in retail. So I think in June and July, you'll see more retail jobs out, which will lead to more part-time again. But there will be increases there. And
what areas? The youth number is very interesting, particularly when you look at it versus what we see in Europe, just as an example, and the crisis that they're facing there. Where is some of that strength coming from, particular industries that the youth are getting their jobs in?
So this, we do see a lot of that in more of the retail and the business segments. We're seeing IT growing in that segment as well, so that's great. But I think we'll start to see it more in hospitality as we go into the summer, hospitality and retail. All right, Kelly, thank you very much for joining us. Thank you. Appreciate it. Kelly Dixon, president of Workopolis.